echo? Hopefully no one else is. Okay, that's a little better. So good morning. I'm Justin Brill, Head of Revenue at Anchorage Digital. Really excited to be hosting another X Space. We've been trying to do many more of these. This one focused on global Bitcoin corporate treasury adoption. So have several amazing guests today. We're going to dive into the current landscape, future landscape, and just hear from several really amazing thought leaders in the space. So I'm going to turn it over to each of them to do a brief introduction, and then we'll get into the good stuff. Um, Nathan, over to you first. Got to start with your boss, right?
Hi, everyone. I'm Nathan, co-founder and CEO of Anchorage. Anchorage works very closely with basically all of the large Bitcoin treasuries. We really appreciate getting to support them through custody, trading, derivatives, and other services. Just been it's been an honor, and it's great to be here.
All right, Jeff.
Jeff Park, and I'm the partner and CIO at ProCap Financial. Thanks for having us, Justin and Nate. It's been a total pleasure to work with Anchorage. As everyone knows, Anchorage was a day one partner for all our custodial help through the DSPAC transaction, and we're just extremely happy to be here, also with my esteemed colleagues of the crypto industry.
Thank you. Appreciate the kind words. Sam, please.
Good afternoon, everybody. My name is Sam Callahan. I'm the Director of Strategy and Research at Oranje BTC. We're the largest Bitcoin treasury company in Latin America. We're listed in the B3 stock exchange in Brazil. And just very happy to be here, help drive Bitcoin adoption at the institutional level with the colleagues here and to be here with Anchorage. So thanks for having me.
All right. Yeah, I love to get the full global perspective. And in that same vein, Khing, please.
Hey guys, Khing here, founder and CEO of Treasury. Again, Anchorage, great to be here with you guys, working with you. Appreciate it. We're pending our listing in Amsterdam, Euronext Amsterdam, aiming to be a leader in the European Bitcoin Treasury space. We're backed by Winklevoss and Nakamoto, and own the Bitcoin Amsterdam conference. So we're super excited to be here.
Yeah. Perfect. And two of my favorite countries. Have spent a good amount of time in both Brazil and the Netherlands, but certainly more familiar with the U.S. landscape. So keen to learn from everyone on this call, and I think that's maybe a good place to start. So Sam and Khing, Sam, you can lead us off. I guess what would you say are some of the unique both challenges and opportunities of bringing this strategy to your local markets? Brazil specifically, but you can speak broader about Latin America if applicable.
Yeah, I think the challenge and the opportunity are kind of, two sides of the same coin, because they're just a little bit further behind in terms of the Bitcoin adoption there. In terms of the institutional adoption, understanding Bitcoin, the market infrastructure is not as mature. So that presents some challenges, but it also presents a lot of opportunity for us to kind of fill that void, to be a leader in that region, to help drive Bitcoin adoption. And that's ultimately Oranje BTC's mission. We want to make Bitcoin more accessible. We want to make it easier to understand, provide educational resources for the region, both at the institutional level and the retail level. And then we want to make it more accessible by providing Bitcoin-backed securities to that market. One of the differences between Brazil and, say, the United States is just a lack of publicly listed vehicles to get compliant exposure to Bitcoin. In the US, there's a lot of different ways to get exposure to Bitcoin. There's like 11 ETFs, there's miners, there's infrastructure plays. In Brazil, there's really only 2 or 3 ways to get Bitcoin exposure in the public equity markets, and Oranje BTC is one of them now. There's large pools of capital there that are restricted from owning spot Bitcoin, but they can own a public equity that has Bitcoin exposure like Oranje BTC. So we're trying to fill that void, just help them understand why Bitcoin. Again, they're a couple of years behind, so we want to eventually start building out Bitcoin products, services to that market to help serve them, to basically just bring in the orange light, to bring in Bitcoin to that region, because they need it. They've suffered from currency debasement, from financial instability, from capital controls. And, that's why Bitcoin ultimately has a ton of value. And so we're just helping them realize that.
Yeah, I think that's a super salient point. Yeah, definitely have seen the interest myself, especially in some of these more developing places. So I guess, Khing, over to you from the European perspective, if you could.
Yeah, sure. Europe and also the Netherlands, where we're based, are lagging in adoption, also in terms of sort of regulatory and political support, I would say, of Bitcoin. So I think there's a very important role for Bitcoin treasury companies to play. And to give you an example, right, if you are like myself as a Dutch resident, I can actually not buy IBIT, right? So I cannot buy the Bitcoin ETF. So it's either, an actual Bitcoin wallet or some of the exchanges, but easy access through my stock brokerage account isn't accessible. So that's in itself actually a great product market fit. I would say secondly, the bringing in institutional capital into the space, I think is a big opportunity actually in Europe. Europe lack high vol stocks. If I'm a European portfolio manager, which actually I have been, it's actually very difficult to get stock exposure to Bitcoin and even to high vol stock in general. Like the average volatility of the European indices is significantly lower than of the US. And on the fixed income side, the European fixed income markets are actually very sizable, right? That's sort of very traditional pension fund investing, very fixed income focused, but actually lack of product and certainly lack of high yielding products. So both for a Bitcoin treasury company, especially one on the main exchange, and treasury would be a mainland Europe, the first one on the primary exchange, is a big opportunity for both equity and credit investors.
Yeah, extremely well said. And then, yeah, Jeff, over to the US side. I'm very keen to hear. Of course, we have a deep relationship with ProCap, but don't want to pretend to know every in and out of everything you're seeing. So, yeah, please tell us what you've seen from the other side of the pond.
Yeah, happy to. And the unique privilege of being in the US is that without a doubt, we have the deepest, most sophisticated capital markets in the entire world. And a lot of the financial innovation ultimately emanates from here, where we can show different experimentations of financial engineering that becomes useful globally. And Saylor has led the way through strategy, and we have a footprint for how to imagine what Bitcoin financialization will look like. I think there's a lot of work to be done still on that front, even in the US market. I think securitization, when you start talking about real credit instruments, will start to get really interesting. There's constructs of Basel III framework that still needs to be resolved for the insurance space in the US. And so there's always going to be advancement, even within the US, around Bitcoin financialization that I think is going to be really, really interesting. And everyone should pay attention because we are kind of at the center of driving a lot of that change in this market. And that's a privilege. The other thing I would mention, though, is we see a big opportunity at ProCap where there are ways to imagine what a Bitcoin permanent capital vehicle can and should look like versus the prior iterations of what has worked. And we want to expand that aperture to imagine those possibilities. And one of the things I would mention is, in some ways, the Bitcoin treasury companies that emerged in the United States early were somewhat, I would call, accidental, right? It was actually operating businesses that adopted Bitcoin as a way to survive, and in the end became an access vehicle that allowed to do a lot of interesting things with a lot of first mover advantage. I would argue some of the original Saylor business or Eric Semler's business were not necessarily, Bitcoin adjacent. But the reality is, we at ProCap believe Bitcoin is just as much of a social asset and a social capital as much as it is a financial asset and a financial capital vehicle. And so the idea of actually building a modern operating business with cash flow that is adjacent to Bitcoin value systems to drive some innovation that I think will be really interesting here, even in US financial services that can be crypto and Bitcoin aligned, I believe is a holy grail that would be really complementary to the idea of a Bitcoin treasury operation being complementary to actually having an operating business that solves for a lot of these bottlenecks that exist within finance with a lot of intermediation as is. So you guys know my team. My partner is Anthony Pompliano. We brought on some great executives from all kinds of experiences in the past. Our COO, Megan, is from McKinsey. She's a partner there leading the consumer practice. Our GC came from Perkins and has been in the crypto space for a long time. And what I think we want to share here is, at some level, the kind of operating business that you can build from bottoms up when you actually can be thoughtful and deliberate about a strategy that is complementary to Bitcoin adoption at the corporate balance sheet level. I think that is a mission that is worth fighting for, because in the end, I think all of us are here not just to create a Bitcoin access vehicle, which is extremely important, but we want corporate adoption, right? We want more companies to buy Bitcoin on their balance sheet and really normalize that experience as one that shouldn't come with a taboo. And one way I think we can do that successfully is if we have an operating business that's actually sharing a nexus with that virtue. So we're really excited about that pursuit. And yeah, excited for some of the things that we're working through that we hope to share in the near future.
Yeah, it's amazing how this whole space has expanded and gone and still laddered up to, Bitcoin as a true store of value, but allowed so many other parts of the ecosystem to interact and thrive alongside of it. And I think a big part of that is having the right regulation and structure. And I hope that's why one of the reasons why Anchorage has been such a core partner. So I guess over to you, Nathan. We often talk about our federal charter and the OCC regulation being a core foundation for DATs, but I wanted to dig into the actual offerings we built around the whole digital asset treasury segment. I guess, beyond, of course, the secure custody of all these treasury assets, how do you think Anchorage has been helping, and what else do we need to do to execute on all these complex growth strategies that are in flight?
Sure, and I think I'll, in many ways, piggyback off of what Jeff is saying. That I think some of the most interesting opportunities in digital asset treasury companies come not just from the direct accumulation of Bitcoin, but the running of, say, operational businesses that are adjacent to a ever-growing Bitcoin stack. In some cases, the first versions of this were the miners, and the miners who were coming in and saying, "Hey, we're going to mine a bunch of Bitcoin and keep it." And so they were in some ways the first players in this space. So Anchorage's goal has been throughout to support a whole bunch of use cases, both for people who directly want to hold an asset and who want to build businesses on top of an asset. And so this has driven our desire to get the federal charter to allow people to hold their Bitcoin in a safe and regulated way at the federal level. But also things like how do you deal with acquisition or disposition of Bitcoin? How do you make sure that Bitcoin treasury companies can buy and sell seamlessly and do that in a way that matches up with their use cases? Just as a simple example, many Bitcoin treasuries have an ATM setup where they issue new shares at the market and then want to immediately buy, but the cash settles a couple days later. And so we have short-term financing that helps them with those trade capabilities. Moving on more to some of the operational use cases that we sometimes hear about, many Bitcoin treasuries want to either borrow against their own stack of Bitcoin, say borrow some dollar or other currency capital in order to do that. And we have very flexible collateral management solutions that allow them to borrow against their own stack, or allow them to make that service available to as potentially an operating business beside their Bitcoin stack itself. And then finally, everyone starts to think about yield. How do you earn yield on top of the Bitcoin that you have on your balance sheet? And there's a whole host of different ways that people think about this: market neutral strategies, potentially lending out that Bitcoin to earn Bitcoin on Bitcoin yield. And then there's also a steady stream of Bitcoin treasuries that come to us and say, "Hey, we want to participate in the derivatives market. We want to do options or perpetuals against the Bitcoin stack in order to have Bitcoin on Bitcoin returns there." And so when we think about it, we really think about it as truly starting with custody and trading for the Bitcoin treasuries, but then super tailoring the service for exactly what this new class of companies needs, wants. And probably one of the most fun parts about being in this business is getting to innovate together. And hear some of the really amazing ideas that people are bringing to the table, and then build an offering that helps them with that. And so we're privileged to get to do that, and that's kind of a preview of some of the things that we offer here.
Yeah, very well said. Agree. A privilege to get to work in this industry and just be involved with so many amazing clients and prospects on a daily basis. Okay, so back over to some of those folks. I'm going to open this one up to all three of our guests here, and something that you see the headlines if you're not deep in the space. There's been more and more focus on MNAV as a metric for how well a digital asset treasury or a particular DAT is performing. Of course, that is one. I suppose I don't know if that's your North Star or not. I'm curious how you view that overall, and what would be the other key metrics that you're looking at when you would be defining success for 2026 and beyond. Sam, you want to take that one first?
Yeah, I think MNAV is just one metric to look at. It's gained a lot of focus with the community, but there's a lot of reasons why MNAV will fluctuate. I mean, in many ways, it's kind of a measure of sentiment of whether the management team will provide value in the future. But MNAVs can compress or expand for different reasons, and they can expand for more negative reasons and more positive reasons, obviously, honestly. I think some treasury companies might have some compression and trade at a discount because they made poor management decisions, whereas others can see some compression because they actually executed and monetized a premium and were able to increase their Bitcoin holdings. And so I think there's different metrics that you can look at to measure success of a Bitcoin treasury company. One of them being Bitcoin per share, which is what Michael Saylor is focused on, and BTC yield. How much Bitcoin are you accumulating in a way that's accretive to shareholders over time? MNAV is just the measure of kind of the sentiment in regards to, whether they'll be capable of doing that more in the future. And so it's kind of a measure of future expectations of whether the management team will execute and provide value for shareholders, but that can fluctuate over time. And there's a lot of baked into that. It's kind of like a multiple. If you're looking at a traditional equity, is how I kind of look at it. And so I think looking at Bitcoin per share and looking at the track record of whether the management team is able to increase Bitcoin per share over time in a way that's accretive to shareholders in different market conditions is a good way to look at a company that's executing on this strategy of whether they can do that in bad conditions and good conditions. It shows that they are resilient and that they have conviction and they're able to deliver long-term shareholder value. And so that's one metric that I would look at.
Yeah, excellent point. And yeah, we've all seen price fluctuations in Bitcoin as well. And whenever it goes down, I don't look at it as the end of anything. I look at it as a good opportunity to accumulate more. I think that's some of the same sentiment that you're speaking to. What about you, Khing? Beyond MNAV, where are you most focused?
Yeah, sure. And I think it's interesting how the market, we had this massive and quick cycle last year, right? Where MNAVs were going all over the place at sort of unrealistic levels to sort of being quite compressed towards the end of the year. And the market has sort of really learned in that sense. And it's also interesting how, in essence, we sort of see a combination of traditional markets and crypto markets coming together. Some DATs trade like meme coins, right? So I think where we are now is that you, as a company, as a Bitcoin treasury company, you've got to earn your MNAV, right? There's no automatic, you're trading it 3 times and you print, you switch on the ATM, it becomes a reflexivity. It's much more of a game of actually earning it. And as Sam said, as a management team, you've got to prove execution, track record, define your own business model. There'll be different sort of sub-business models that ultimately leads to, again, the North Star of Bitcoin per share growth. So I think it's frankly only good that we're in this situation now because clearly at 5, 6, 7, 10 time MNAVs, investors are just going to lose money almost by definition. So it's much better to be here now, sort of reset a little bit, and we can all sort of move with better business models.
Mm-hmm. Yeah, I think I wouldn't necessarily thought of that angle, but that's a really, really great point. Jeff, do you feel like you don't want to put, if you if you feel like that covered it, I have another question I can throw their way, but I feel like by the way you're nodding, you might have something to
I'll
add
add
on there.
thoughts to it. I think MNAV, for better or for worse, is a slightly misused construct at times when it comes to like a publicly traded company, because the idea of a NAV really being relevant historically has been attributed to the fact that there's an element of redemption feature, right? So NAV is useful when you're investing in a private equity fund or a hedge fund or a closed-end fund or open-ended fund, to think about the construct of like, what is the asset worth against the liquidity that I might be able to achieve. And so, we're all very familiar with GBTC having traded a discount to its balance sheet precisely because there was no redemption mechanism, right? And actually, it's not just crypto. There's lots of things in the public market that trade at a discount to book value. I would argue there's a lot of open-ended hedge fund vehicles that actually are publicly listed that trade at a discount. Bill Ackman has a publicly traded hedge fund that trades at a persistent discount to NAV. And it's not because they think Bill Ackman's not delivering value. It's because the price of liquidity is going to be a premium for a vehicle that does not have that asset liability matching program in place. So I think part of the challenges with an MNAV construct of a public equity vehicle is that there is no redemption feature, right? You're essentially buying a corporate balance sheet that is exposure to an asset that you believe can provide value. So by that virtue, agreeing with the panelists here, at some level, you have to go back to the drawing board to deliver real value as to why that NAV in itself is a valuable endeavor. And we all know Bitcoin is very, very good collateral, right? Bitcoin is good collateral because it can be productive and it can earn yield and it can do a lot of things that generate Bitcoin on Bitcoin type returns. But again, going back to the principle of operating and revenue, I do think at some level, the graduation towards a treasury vehicle that isn't just like a Bitcoin access vehicle will demand a traditional metric towards valuation where people want growth or they want dividends. I mean, those are kind of the classic markers of why people buy equities. And you have to demonstrate some kind of growth beyond passive Bitcoin. So that's Bitcoin on Bitcoin return, which I do believe is a compelling way to think about closing gaps with yield generation organically. And then more interestingly is the operating revenue. If people are interested in the growth potential of something that is Bitcoin adjacent, there's a demand that will come from it. And so in that construct, I think there are different levers to kind of think about MNAV. But to me, it's more of a floor guidance mechanism than it is to think about it like as a ceiling towards like where it should be trading at, precisely because growth is the part that's less unbounded, where Bitcoin is very defensive in the ability to define a balance sheet's value that you think is worthwhile.
Okay, that was fantastic. I loved all that framing, and yeah, that just shows you more of some of those examples you gave, this convergence of the world of crypto and TradFi just happening more and more every day. Okay, so back over to Nathan here. You touched on this a little in your introduction, and you know, we certainly have seen this market continuing to evolve. We've talked about there being a lot beyond passively holding Bitcoin. Can you just go a little bit more detail into some of these revenue generating streams? You mentioned yield, but like, what does that look like in practicality? Are there other operating models that you've seen and heard in some of your conversations? Like, what's the actual tangible step that a DAC can take in the short term to make sure they're maximizing across the board?
Sure. I think the ways to think about this are fundamentally a question of what is the management team's strategy. There are absolutely management teams that have as a goal that, hey, the goal here is to just straightforwardly accumulate more Bitcoin, and that's absolutely a valid strategy. There are others who say, I want to do say derivatives. I want to write various call or put structures in order to earn some income on top of the balance sheet stack that I have, and use that as a way either to acquire more Bitcoin when price is good or to earn some income, Bitcoin and Bitcoin returns on top of it. There are certain fund managers that some Bitcoin digital asset treasuries are allocating into that are going and trading that Bitcoin in market neutral strategies, either on exchanges or with other market makers, and doing that as a way to earn Bitcoin on Bitcoin returns. There's an emerging thesis around BTC-Fi opportunities. Are there opportunities to utilize the Bitcoin network in order to either stake the Bitcoin or use it in some of those DeFi opportunities? It's emerging. I think it's still early stage there. And then I think there's also opportunities to take Bitcoin and perhaps even wrap it and put it maybe even onto other chains. Again, depending on the management team strategy, where deploying into say Ethereum or Solana type opportunities where the Bitcoin can be wrapped and put into there. Can also be an interesting dimension. There's also a emerging area to look at around the interplay between Bitcoin and stablecoins, and what does that mean as more dollars move on chain, maybe even as more tokenized assets move on chain. How does that play in with Bitcoin related opportunities? And so I think there's some interesting brainstorming going on in that area. Where maybe borrowing against Bitcoin with stables can lead to the kind of a productive use of the Bitcoin itself. So I think these are just to kind of give a flavor for some of the things people are looking at, and I think there's more to come in this area.
All right. Yeah, a lot to chew on in that response, I guess, to the three other gents here. Anything you want to add on to that specifically around the evolution of the model?
Maybe just one thing from our side, obviously, as a Bitcoin treasury company, the first, and it's also the Saylor principle, right? The first and most important thing is, keep your Bitcoin safe. And certainly from our side, as we look at different opportunities to use our Bitcoin productively and be able to earn that MNEF premium you're speaking about, then, it starts with that security and custody and everything around it. So that's certainly a very important element. That's really how we start, because it's super asymmetric, right? You're going to earn some sort of percentage, and if you lose one single Bitcoin, your business model could really be dead. So it's something that it takes a lot of caution and a very sort of extremely risk-averse approach from our perspective, at least.
Yeah, excellent, well said. And I think you mentioned Saylor strategy, and I just saw him on a recent podcast where he was essentially saying he doesn't view more DATs as competition. He views it as good for the overall landscape and the value of Bitcoin. And I think that that's something that most of this industry continues to have in common. So I guess, with that idea and hoping all of us, that we're building better mousetraps and each have differentiators. If someone was listening right now and they wanted to get more into this space, if you were, say, a CFO, CEO at a company, besides Anchorage, what do you think is the first phone call that you would suggest that they make? First conference to go to, first practical step that you would say someone should take if they were considering this? Or would you say, don't do that, just invest in one of us?
I can kick it off, and I'm a little biased here, but I will throw a little little love for my former colleagues at Bitwise. Bitwise, actually, we host an event in New York every year. It's like the Bitcoin Standard Corporations event, where we actually talk a lot about corporate adoption at the level in which we have participants, both from the crypto native world, but also skeptics, CEOs and CFOs in TMT sectors that are kind of interested in Bitcoin, but don't exactly know how it would fit into the balance sheet strategy. And I think those kinds of forums are really important, because you do need to have those vibrant dialogues between those who are slightly ahead in different playing fields and then those who are catching up, and be able to have some information sharing. And so I think that's always like a really great place to start. I would also just say the ability to like have conversations to like anyone who is having any amount of Bitcoin on the balance sheets as an operating company is like probably a worth phone call too, because those folks are not betting their career on that, but the fact that they're dipping their toes in a little bit means that it's broken through a chasm for which there should be more dialogues for. And there's lots of trackers out there that show you that kind of slow adoption across the curve. But that's something that I would encourage everybody to do.
Yeah, I mean, I'd echo that. I was actually at the Bitwise event last year. We put on a great event. Obviously, strategy world is one. Michael Saylor and team has been leaders. They literally published the playbook. They've been pioneers. That I've seen that. I've been at that conference for 3 years running, and it's been fun to see how that conference has kind of morphed into more and more of a Bitcoin corporation conference. And last year, it was very, very evident that that's where there's a real intersection happening between traditional finance and the Bitcoin ecosystem. And so that's happening in Las Vegas at the end of the month, or on the end of February. So I recommend people check that out. I recommend to go off what Jeff just said, corporate adoption's happening at the public level, but it's also happening with small businesses as well. I think River puts out great research about some of the adoption happening with small businesses. And I think the X community is where you really learn. So I think one of the best parts of this is that it's still a smaller community that's driving this. There really should be thousands and thousands of public companies that have Bitcoin on their balance sheet, but we're still in the very early days of adoption. So right now it's an opportunity where you can just have conversations with, wonderful CIOs and CIOs who are leading the charge here on X. DMs are open. My DMs are open. Very approachable still. If you want to learn of how to implement a strategy, if you want to bounce ideas off of the people that are already doing things in this sphere, then it's still there, very approachable. We're still in the early days, so just don't be shy is what I would say.
Yeah, that's one of the things that drew me into crypto originally. People are really just willing to teach, learn, share insights, and yeah, this particular vertical is no different. I mean, this is a bit of a hot take question, but since you mentioned some of these more mature companies, does anyone think how far away are we rather from seeing, let's say, a top 10 or top 20 S&P 500 company who hasn't dove into crypto adopt some sort of Bitcoin treasury strategy? Is there one missing piece of the puzzle? Is it just more education? Is there some inflection point, something we're going to see in 2026, or is that further out the curve?
So unfortunately, I think we're further out the curve for the biggest players. And the reason I say that is because we now have some data points as to some of the adverse effects that occur when you buy Bitcoin on the balance sheet, which was, I think, made most salient when S&P had rated MicroStrategy. And when you look through kind of the reasoning for kind of the credit rating, what you see is that it is not compatible with the Basel III framework. So that, I think, is the missing piece in all the ways that we maybe are getting closer to solve for accounting treatment. We're getting closer to solving for tax treatment, but we're not making a big dent on the Basel III side. And so if you have Bitcoin on the balance sheet, it's actually something that impairs your credit. And I think if you're a credit issuer, like the big Mac 7s are now, especially on the back of the data intensiveness of AI, they are not going to risk their credit rating for access specifically to have Bitcoin on the balance sheet, which is a problem because in some ways, it's one thing to be like neutral about Bitcoin adoption. I would argue it should be a positive thing. I know we'd all agree there, but it's actually the totally different. It's negative. It actually causes negative equity value. And so this is actually acrimonious. And so my belief is until the Basel III framework and the rating systems can accommodate Bitcoin better, it's not easy for big corporations who are debt issuers at a prolific level to risk their ratings for that. But that's, I think, another reason why we got to keep kind of pounding the table. And, Saylor and Strategy in particular has been such a strong ally to be in the halls of DC to drive some of these conversations. You guys all have seen kind of the ability for how MSCI also recently came to the conclusion of not removing digital asset treasury companies from their index policies. A lot of that, does come down to the work done, for better or for worse, in the halls of Congress. And we should continue to advocate for those supporters in the industry as well.
Yeah, acrimonious. Great use of the word acrimonious. Khing, please go ahead.
I was just going to add to that is that obviously for any sort of public company, ultimately they work for the shareholders, right? At least they should. So they care about that. Saylor always publishes every quarter how many institutional investors he has. I think it's 13,000 plus now. So he's made huge inroads there. But that number just needs to increase, right? And certainly in Europe, we're way behind there. So I think on the one hand, there's the regulatory and all the different infrastructures that need to support that, but also the investors, once institutional investors especially, start thinking about this and start advocating that with the management teams they're investing with, then it's really, I think it'll be open basically, and a lot of companies will start doing it. So it's going to be one of those binary events probably.
Yeah.
I think it.
Please.
One other point is just that it comes down to like governance with a lot of these companies as well. I mean, if you have like a founder who's a CEO, has a lot of control over the voting rights, maybe like a Meta, for instance, could make the jump just because Zuck thinks it's important to do it, even despite some of the negative effects that Jeff pointed out on the balance sheet. But a lot of companies turn to Bitcoin because they need to, and a lot of these Mag 7 and large companies are in really good positions. They're benefiting from this system, and so I don't really see them turning to it unless you do have somebody who's more philosophical about Bitcoin and wants to move into it and has the voting rights to do so. And so that's one of the reasons why Saylor was able to do it in the beginning in August 2020. And I think that's an important component. I mean, we saw what happened with Microsoft. Those shareholders really just weren't into it, even despite Michael Saylor giving a great pitch. And so it's going to take a little while for these bigger companies to get into it, but that's okay because the companies on the margin or the companies that right now have low growth and need a competitive advantage, Bitcoin's there for them. And so I think we'll continue to see corporate adoption at the margin. And maybe there will be this like, one or two companies that come out of nowhere that the founder just or the leadership just is really into Bitcoin. But who knows? Maybe there's a company like in 2026 that does that, or like a Dell or something like that. But we'll see. We'll see.
Yeah, yeah. I really loved all those answers, and yeah, the DC point, and having the right frameworks in the government is a huge piece of it. Anchorage Digital just had an event. We just celebrated our 5-year anniversary this week of having the OCC charter. So we hosted a big party on Capitol Hill with Kevin, our head of policy, and a bunch of other folks in the government. And I think it just is important to keep those lines of communication super open, and think we'll see some more positive developments on that front this year, hopefully. And Nathan, I mean, I think this was kind of what everyone touched on, but beyond those, I mean, what are the other, or maybe the most underappreciated factor that will drive some of this broader Bitcoin and crypto adoption?
Yeah, I mean, I think it's a story that's familiar to many of us within the Bitcoin ecosystem. But generally, I would say whether you call it geopolitical instability or geopolitical evolution, I'm not exactly sure what we're seeing in the world today. But that tends to be a bull signal for Bitcoin itself, in a bunch of different dimensions. So while on the last topic we don't have any of the Fortune 10 holding Bitcoin, we do have the United States deciding to hold on to their Bitcoin and keep it and become hodlers. And so that's, in some sense, they're the biggest corporation on earth, if you will, in a very abstract, if you squint just right at it. So I think that's a great sign. And I think just generally, as more people are looking for stability in the world, Bitcoin is going to be a safe haven asset for many. And having direct access or access via digital asset treasury, Bitcoin treasury companies, is just going to kind of increase the reach of Bitcoin. And as the reach of Bitcoin increases, I think we're going to continue to see more people understand its value and its purpose within the world.
Yes, purpose. It's not just about the number going up. We are here for a purpose. I wanted to wrap up with a chance for each of our three guests to give any final rapid fire thoughts or things they want to double click into more. Just in the broader landscape, I'd like to leave it open-ended. I feel like we hit on so many great topics here. What do you like? What that we haven't touched on yet are you most excited about in the Bitcoin and crypto space?
I can kick it off, and maybe I'll cast a little bit of a wider lens to it. I think we have a tendency in crypto, and especially in Bitcoin, to be somewhat nihilistic about the worldview, with some cynicism and pessimism about just kind of the world order and chaos and scarcity and all these things. And I think all of those are broadly true, and yet at the same time, we're living in such an incredible period of productivity gains that I think there is a way to channel Bitcoin to be a part of that conversation with an optimistic lens. And it is something that I think is important in the long run, that if we want like Bitcoin broader adoption to happen, that we're able to kind of channel that potential energy towards something useful and productive, and demonstrate that as leaders of the Treasury, that space. So I think what I would hope for is that we kind of enter into a world where we think of Bitcoin finding value not just from its scarcity, but in a way that it can be complementary to some other productivity gains that people can relate to. And especially if you think about like Bitcoin just being the proxy for how bad our financial services are, right? Like they're just obviously not working in the ways that we're all very familiar with. There's so many interesting things that are happening, especially on the front of like AI, where they're solving real problems on the operational front too. And so who's to say the idea of those things cannot be complementary to each other in the long run, if we kind of want to believe that digital transformation is at the center of kind of what we're imagining, and Bitcoin is part of that dialogue. So I'd love for all of us in the Bitcoin world to kind of open our eyes to a broader world out there, outside of kind of the microcosm we live in, and plug ourselves into those meaningful conversations and make Bitcoin an ally to those technological growth stories just as well.
All right, that was tremendous. Sam or King, any wrap up thoughts or threads to pull on?
I'm you know, if I'm looking big picture and more broadly, I'm just excited about corporations having stronger balance sheets empowered by Bitcoin. I think over the last 30 years, we were in this period of decapitalization, which made the corporate America and more broadly more fragile, right? And I think it's a good thing just when more corporations are retaining their earnings and then deploying that and investing it and doing R&D. And to go back to the productivity gains, most productivity gains are driven by innovation. And to me, innovation is actually driven by the ability to save, both at the individual level and the corporate level, and to drive long-term investment, which drives more innovation, which drives more productivity. And so that's how I envision Bitcoin and productivity being connected. Bitcoin is a revolution in savings technology, and people and corporations being able to save more will lead to more productivity gains over time. And that's what gets me really excited about corporate adoption, about Bitcoin Treasury companies kind of leading that charge to build up more resilient balance sheets, which drives productivity gains.
Yes, some things just, yeah, balance sheet strength, good old financial statements, all those pieces of the puzzle. You know, that's the sound money that we need to continue to achieve all our shared goals. What about you, King?
I guess final thing is on Bitcoin Treasury companies. I think they will become a very important part of the financial ecosystem going forward, as Bitcoin as a reserve asset starts gaining importance, right? I mean, obviously, I think many of us will have the Bitcoin standard in mind at some point over time. And I think it means inevitable that Bitcoin Treasury companies are actually a very important part of that puzzle of essentially linking Bitcoin to the financial ecosystem that we have. And it will change and it will be different iterations along the way. But that to me is a long-term vision that gets me actually very excited about being part of this ecosystem that we're building. So yeah.
Okay. Nathan, any final wrap-up thoughts before I give the good old Anchorage sales pitch and send everyone on their way?
I think we've covered everything. This has been a real treat. Thanks everyone for coming on.
Yeah, couldn't say thank you enough. I know everyone's super busy, so yes, of course, Nathan, but also Sam, Jeff, King. Greatly appreciate such high-level strategic insights. It's extremely clear that this whole DApp model is moving from niche to a core element of forward-thinking corporate finance. So to everyone listening as well, thank you for tuning in. If you want to learn more about how to safely, compliantly build everything related to your digital asset treasury strategy, or really anything in the crypto banking landscape, feel free to reach out on X. Check us out on Anchorage.com, and we look forward to seeing you on our next live stream or at our next event soon. Have a great one, everybody.